Welcome back to the final round here on Yahoo Finance. Taking a look at Peloton, shares surging here after hours, now up more than 7%. The street very satisfied with the numbers coming out from its most recent quarter, where sales surged 172%. They're also excited about Peloton's guidance. So here to discuss more on this, we have James Hardiman. He's a Wedbush Securities leisure and travel analyst. And James, I know you have an outperform rating going into these earnings reports, $100 price target. What did you think of this quarter and the numbers that we're getting from Peloton?
Yeah, I mean, it was an excellent quarter, although that should be a surprise to no one who's followed this story for any amount of time. I think the setup heading into this quarter was that they were going to sell as much product as they could make, bikes in particular, because they're not doing a whole lot of treadmills right now. And so, they grew connected fitness subscribers 113%. That was a little bit ahead of the streets, 110%. But that's not really the story. The story, I think, is twofold. A, the profitability was excellent. $143 million in adjusted EBITDA. That's almost double where the street was. And then, similar story with respect to the guidance. The EBITDA guidance for fiscal 21 was substantially ahead of the street and substantially ahead of where we were. And obviously, we're pretty bullish on the stock.
James, we saw that 210% jump in digital subscription, certainly helped by the 90-day free trial that they had. I'm curious how much of that subscription you think is going to be a big driver for the company moving forward? How many people are actually going to stick around? Or at the end of the day, is it really still about the product offering in the bikes and the treadmills?
Yeah, it's a great question. And I think it's worth clarifying that 210% growth was paid digital subscription. So all those people that were getting it for free aren't counted in that number. I would say, A, that number was substantially ahead of what the street was looking for. But B, the way it worked, if you remember, they did that 90-day free trial starting really when a lot of the gyms started to close, so mid-March. And so all of those people would not have needed to start paying until mid-June, right? And the quarter ended June 30th. So I think that growth is really just the tip of the iceberg in terms of the benefit they could potentially get from the million plus people that downloaded the app when the pandemic really began.
Hey, James, Rick Newman here. I'm going to give you a very small data point. I didn't buy a bike, but I did join up on a monthly basis. When my gym closed, I used it. I downloaded the app. But my gym has reopened. I'm going back, and I'm going to cancel my membership to Peloton at the end of September. Am I just an outlier, or do you think that could happen on a broader scale?
No, I mean, you're not an outlier at all. And, given how many people did exactly what you did, Peloton really just needs a small fraction of those people to be longer term consumers for that to be a big time win for them. And I'm assuming that you didn't go out and buy a $2,000 bike. So that would be a concern if there were a lot of people that made that investment and then dropped out. Ultimately, the people that are just signing up for the digital subscription, that's really the entry point, right? That's their way of outreach to people that didn't have an option. I would tell you if they could get 15% of those people that signed up when the pandemic hit, it would be a grand slam program for them.
Hey, James, I'm going to ask you the timeless question about Peloton, though, which is the TAM question. And more relevant now, at what, $94 than it was at $23 in March. So just, is this a one-trick pony? How big can it get? What do you think?
Yeah, I mean, I think it can get substantially larger. I mean, it feels like 10 years ago that this company IPO'd. It was a year ago. And even as of, I believe it was the second quarter call, they believed that TAM had already potentially doubled, just given the increased exposure that they had gotten. 6 months later, I would argue that it's grown substantially from there. And then, arguably the biggest news of the week, bigger than these results, I would argue, are the new products that they announced 2 days ago. They announced a cheaper bike. So they brought their existing bike down by $350, which, as you can imagine, the lower the price gets, there's an increasing addressable market that you're targeting. They came out with the Bike Plus, which is the higher end version. But I actually think the biggest news is the cheaper treadmill that they came out with. All the work that we had done suggested that $4,200 plus for a treadmill was just way too much, and they didn't. At the end of the day, they didn't sell a lot of those. They brought that down to more like $2,500, which is a very competitive price point. And it's worth noting that the treadmill market is 2 to 3 times the size of the spin market, the exercise bicycle market. And so if they can just get a small percentage of that, their addressable market has grown by leaps and bounds.
All right, James Hardiman, great to get your perspective of Wedbush. We'll have you back soon. Thanks for taking the time to join us.
Thanks for having me.